Hello, I'm Martin Smith and this is your UFXBank Week in Review. Today we'll cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover the headlines of the week, let's look at last week's risers and fallers. The euro-dollar had a somewhat mixed performance this week, but saw a nice gain, jumping 2.3% to close the week at 146.33. The pound also had a mixed week versus the dollar, but was unable to match the success of the euro. The pound fell to 164.23 for a loss of nearly 0.5%. The dollar had some early success in the week against the yen, but began to struggle on Wednesday, eventually settling at 80.26 on Friday's close. This left the pair with a weekly loss of 0.64%. The dollar CAD went back and forth throughout the week, but managed to notch a fifth straight week of gains. The pair added 0.16% and was last trading at 0.9775. Commodities now, July crude orders struggled throughout the week and eventually took a loss of just under 0.4%. Orders last traded at $100.22 per barrel. Gold also struggled this week but managed to gain 0.37%. The precious metal last traded at $1,541.72 per ounce. News this week, the non-farm payrolls report was released showing that the US economy added the fewest jobs in 8 months, further increasing concern that the recovery is slowing down. The dollar has dropped 6.5% this year against its 9 developed nation counterparts. Payrolls had increased by a far less than projected at 54,000, and unemployment increased to its highest rate this year at 9.1%. The only positive news for the US in all of this is that April had a revised increase of 232,000 jobs, which was greater than previously expected. What you have is a month of mostly weak data coming out of the US, expansion in manufacturing slowing down and super low interest rates. All combined, this is significantly lowering the appeal of the US dollar versus other assets. On top of everything, Moody's announced that it would consider putting the US government's debt rating on review for a downgrade. In April, Standard & Poor's also indicated that the US risks losing its AAA credit rating if policymakers don't reach an agreement on plans to lower the national debt and reduce the budget deficit. Most experts are predicting that the US will respond by raising their debt ceiling, a plan that has some investors very concerned. However, the overall weakness of the dollar has had a positive effect on the euro, which rose to a 4-week high and gained the most it has in 4 months against the dollar. This comes as finance ministers attempted to address the debt crisis this week by approving additional aid to Greece, alleviating investor fears that some of the region's nations would not be able to meet their obligations. The current package is expected to prevent Greece from defaulting on its next payment, but will likely come with strict conditions. All of the indicators at the moment, especially with a distressed dollar, suggest that the euro will continue to strengthen in the near future. In fact, the recent euro strength has already had its effect on the British pound, after an index of UK service industries showed far slower growth than forecast, leading to further speculation that an interest rate increase will be put on hold. The pound was trading at 89 pence per euro, the first time it had reached this level since May. At the same time, mortgage approvals in the UK fell to their lowest level in 4 months, a strong indicator of slowing economic growth. Adding to the pessimistic outlook, Barclays Capital lowered its 6-month and 1-year outlooks for a pound, citing the most recent data coming out of England. Well, that's all we have time for. I hope you'll join us next week. Until then, be sure to visit us at UFXBank.com for simple, safe, secure trading. For UFX Bank, I'm Martin Smith. Good luck and happy trading.